Hello, this is Emily Cressey with HomePro Associates, and today I'm going to be going through a November 2020 market update. So here we're going to be talking about what some of the trends are nationally and locally, especially in the wake of coronavirus. So as of today, we are back. Governor Inslee has issued some new warnings, some new protocols, so we're back in a more restricted phase of the coronavirus lockdown procedure. And so one of the big implications on that for real estate is that there are no more open houses at this point. So we'll be doing virtual open houses where we go, and I'll film it for you, but you can't just go tour them on your own right now. And it's funny because even though we've been going through this whole coronavirus thing this year, despite that initial downturn when we first got the news and we all thought it was going to be really bad, zombie apocalypse type of thing, the economy has actually had a very strong recovery, and it's been going up in the V-shaped recovery that they predicted, even though coronavirus hasn't completely gone away. And in fact, you know, watching the news, it can be very scary and depressing. It just seems like there's a lot of goal out there to kind of get people worried, and you know, if it bleeds, it leads. So there's a lot of bad news in the news, but despite that, buyer demand here in the Seattle region is still super high. So I live in Lake Forest Park. I cover Everett, Seattle, Bellevue, and a little bit south of the city, and I have seen no slack for Seattle. The good news, we have a lot of strengthening economic indicators. People have been putting themselves in a great position to be able to buy a home. Look at the FICO scores. They've been going up this year. People are being more responsible with their money. When they got their stimulus checks, what did people do? Well, a third of them spent the money, but a third paid down debt, and a third saved the money. So these two groups of people are, again, positioning themselves better to buy. Businesses, certainly, I'm sure some are going out of business, but overall, we're looking at strong business application development. And if you look at this national map, you can see are people changing their spending habits? Is consumer spending changing? And here in Washington, it's blue. That actually means consumer spending has increased. Yes, we are spending more now than we did in the beginning of the year before the coronavirus outbreak. Unemployment was high for the first couple weeks in March and April, but now in October we're back down to low levels. Likewise, the number receiving unemployment insurance has been going down. And the data from this survey of business uncertainty suggests that it is going to be a tough slog going forward, and that businesses are not likely to do well. Obviously, in Washington, you know, certain sectors, restaurants, travel, Christmas shopping with the retail shopping limitations, they could all suffer. So we're certainly not out of the woods yet, and it looks like they're projecting the overall business economy to take 4.5 years to recover. So if you're waiting for some magic thing to happen in terms of the economy before you sell your house, that might not be happening for quite a while. Good news again here on the forbearance front. You see, in forbearance is when people are not able to make their mortgage payment and they call their lender and say, hey, I need to stop making payments for a while, or reduce my payments, or work out some sort of a plan to get help so I don't go into foreclosure. So again, originally in May and June, this was relatively higher, and now in October, it's gone down to about half the prior level, maybe a little more, but overall, this forbearance and foreclosure is not a big issue here in Seattle. We're not seeing foreclosures coming on the market at any significant level. So it's not going to be like the 2008 crash where all the prices went down and everybody had to sell. Unfortunately, if you're an investor, some of us were waiting for that price crash so that we could scoop up property at a little bit more affordable rate, but it just doesn't look like that's going to be happening for us here in Seattle. Months of inventory indicates how well balanced the market is. So a balanced market is considered about 6 months of inventory. These are national figures, but let me just be upfront. Seattle is almost always in a seller's market phase. We've had such strong appreciation here over the decades that typically we just don't have a lot of inventory. And right now that's especially true. We have less than 1 month's worth of inventory. So here are the local figures. King County days on market is only 18, Snohomish County 17. So those puppies are getting snapped up quickly once they go on the market at the right price. So year over year, the change in listings, the total listings are going down. This means that we don't have very many listings altogether, and there are also not a huge number of new listings. So why are homeowners not putting their houses on the market? We need more houses. We've got lots of buyers because of the low interest rates. They're good savings and credit, but where are the sellers? Well, here's what's going on. Zillow reports that 1/3 of the people are not selling because of financial uncertainty. 25% are not selling because of COVID specifically, and 34% just feel like life in general is too uncertain. So overall, the COVID crisis is really still in play, still making sellers nervous about putting their house up for sale. So Jeff Tucker at Zillow asks this: homeowners who feel life is uncertain right now may think they can still get a strong price if they delay selling until they have more clarity. A lot of people at this time of year are saying, I'll just wait and put my house on the market until spring. Everything will have settled down by then. Spring is a strong seller's market. I'll just wait. But Jeff says the catch to waiting is that it may raise the cost of a trade-up. So if you're selling this house to buy the next house, that next house might become more expensive. Why? Because this fall's record low mortgage rates, which make a trade-up more affordable right now, are not guaranteed to last. So if interest rates go up, then you will have fewer buyers able to afford your property, and you will be less able to afford your next property. So what are people expecting for home price appreciation? It kind of ranges all over the board. Zillow is expecting strong appreciation at 7%, which is well above the typical national average. CoreLogic is predicting less than 1%. MBA forecast for 2021 says to expect rising mortgage rates. So it's around the 3% range here in 2020, and they expect it to go up to about 4% in the next year, or the next 3 years. So that's not a huge increase, but it may be enough to have an impact on the affordability of your home. And again, nothing is guaranteed here. These are just projections. So you can run the numbers and see how much flexibility you have when it comes to being able to buy something new that you can afford and that you would like. This diagram is an affordability index. So the higher things are on the index, the more affordable they are. So in 2006, when home prices were skyrocketing, things were not very affordable. And after the crash, when everyone was going into foreclosure, then they became more affordable again. And here right now, we're at 159. And as you can see, this is still well above the average affordability levels over the last few years. So it's still pretty affordable given everything that's going on. Mark Fleming at First American says, the good news is that affordability remains significantly higher than a year ago, mostly due to falling interest rates. So 1 month of data does not make a trend, but this month's decline in affordability, things are becoming less affordable, interest rates are rising. This month's decline in affordability signals that the current dynamics producing faster house price appreciation may begin to erode the affordability gains of recent years. So it's becoming less affordable as we go on. insurance is going up, and there's not very much inventory, which drives up prices. So increasing prices, decreasing interest rates means less affordable homes. So if you guys want, you can come to our website and download the winter buyer and seller guides. These just are going to come out on December 4th. But what these do is they tie in a lot of this data and talk to you about how it affects your position as a buyer or a seller in today's economy. You can go right now. We've got the fall ones still up, but we're looking forward to keeping you informed about what's going on in the market so that you can make a good home buying or selling decision, whether it's now, in months to come, or in years to come. I'm Emily Cressey with HomeSmart, and it's been a pleasure to help you today.